Well, the German investor Aton intent on taking over Murray & Roberts. It's tabled a higher offer to the construction group after it's upped its stake to about 40%. But what effect is this going to have on the planned merger between Murray & Roberts and Aveng? Aveng, of course, a shadow of its former self. When margins went to pot in South Africa, it decided to globalize. It was an expensive mistake, and Aveng is worth just virtually nothing relative to what it was. So, I mean, in the 30 cents sort of range, Aveng is as good as dead in the water, it would seem, Paul Theron. So here you've got Murray & Roberts wanting to buy Aveng, and then you've got Aton sitting behind Murray & Roberts wanting to buy Murray & Roberts. Not all of those transactions can happen at the same time, well, I would assume.
The big background here is that, as you were saying earlier, construction companies, very cyclical business. Sometimes they look tremendous, and this is not the only cycle. I'm old enough to remember how they did super well in the late mid-90s and then had a big contraction phase, and then the mining industry boomed and saved them, and then the World Cup and so on. But they are notorious for getting into trouble, having to sell off their assets, having gearing that goes through the roof. And then, of course, it's cycles of fixed domestic capital investment. When those dry up, then you've got no business, and it's really terrible. Right now, it seems to me, Aton, which is privately owned by Germans who have a long-term perspective, like the look of Murray & Roberts, because it's got some interesting oil and gas expertise globally. They want to do the deal. They've been accumulating shares from weak holders. The management at Murray & Roberts don't like the idea of being part of some German family-owned conglomerate. So they're like trying to invent various moves to throw these Germans off their tails. And it's not clear that it's working.
Yeah, I mean, you can call Aveng the world's weirdest poison pill because they can't actually do the Aveng deal without the Aton guys saying, okay, well, we're happy with it because it's quite a big deal, and they need shareholder approval. So it's a little bit bizarre, to be quite honest. But I guess, I mean, if you look at it at arm's length, there are some synergies between Murray & Roberts Oil and Gas and McConnell Dowell from Aveng in Australia, and you've got Moelmans from Aveng here in South Africa in the mining industry, and Murray's have their mining platform. So it does make sense to a certain degree, and then the idea would probably be to sell off.
But you buy Paul's argument that all Murray & Roberts really is doing is just making a nuisance of itself to put the Germans off.
Yeah, it's really strange because they can't really put the Germans off by doing this because the Germans have to approve the transaction.
And the Germans own 40% of them.
So are they just trying to aggravate the Germans?
You don't want to do that.
You know,
it hasn't ended well in the past.
It's a bit like a situation where your mom lined you up with a date for the matric dance and you said yes. But you've now said to her, well, actually, I'm gay and I want to go to the dance with my cousin. It's like you're just trying to throw the cops off your tail at this point.
That is the unlikeliest analogy I have ever heard. And one gets very distracted, I think, if one doesn't travel around the whole of South Africa. If one travels down Oxford Road from Rosebank to Sandton and around Sandton, you would think that the construction sector in South Africa was booming. There are lots and lots of cranes, there are lots of holes being dug in the ground and foundations being laid. There's a huge amount of activity.
Yeah, but the reality
happening in the richest part of Africa.
But the reality is that their margins are paper thin. So activity levels have picked up, but there's so much excess capacity in the industry that guys are tendering to do work at paper thin margins. So
they're doing 2 or 3% margins. You've got to lose a truck and you're done.
Exactly, yes. Because they've got these contract disputes. There's some kind of an overrun, or something's run late, or foreman didn't pitch up for work, and suddenly you've got a R1 million claim against your project, and you're making a loss on it. So that element of it makes it very challenging for the construction sector still.
So I'm taking neither of you is going long construction in South Africa right now because there just isn't really a business worth talking about.
It's a wretched business, I'm afraid, and that's not to detract from the fact that apparently they're very good. By international standards, South African construction firms have a great reputation for the quality of building they do and the way that they deliver relative. In other words, it's worse elsewhere. But Aton's original offer for Murray & Roberts was at a level which they regard as embarrassingly low, but it was higher than Murray & Roberts had traded for a long time.
Yeah, it was about 30 or 40% higher than Murray & Roberts' ruling price for ages. I mean, it was under $10 and it came in at 15 or thereabouts.
Yeah, but then the Murray & Roberts guys said, well, we had an independent valuation done, and they say our shares should trade between 20 and 21 rand.
Sorry, but you guys are involved in markets on a daily basis. What is a company worth?
Well,
it's worth what it's trading on the market at any point in time, right?
yeah, I mean, you can say that some companies are mispriced to a certain extent, especially when it's at that size, because there's some liquidity constraints as well. And I mean, you have a competitive advantage if you can identify companies that are over or undervalued in this market. It's just that no one else agreed that Marion Roberts was going to.
So therefore, it's not worth 20 to 25 rand.
Exactly, because I think they have a forecast for their cash flows. They discount it back to the present value. It says 20 to 22 rand, but there's massive risk embedded in a cyclical company like that.
I'm misquoting Trevor Manuel, and I'll run the risk of being in trouble, but something like going to a beauty contest where your mother's the judge. You're going to win.
Yeah.
I mean, you know, we can get any kind of independent valuation.
I think that analogy works quite well with my matric dance analogy.
Mine was better. Trevor's was better. Quick thought on Capitec. It's being very resilient. I know resilient's a bad word, but it's being incredibly resilient in the face of continued attacks by Viceroy. Are we missing something that Viceroy is getting? Is the Reserve Bank missing something that Viceroy is getting? Is Capitec management missing something that Viceroy is getting? Are Viceroy the only clever people in the world?
So the initial Viceroy report was very heavily substantiated by claims from an activist investor group called Summit Financial Partners. And they'd actually taken Capitec to court. All this information was publicly available information, but people weren't really paying any attention to it. Viceroy seemed to look at court records when they are building these short investment cases, and they based most of what they were saying on what Summit was saying, and the market kind of reacted to it at first because Viceroy, they brought down Steinhoff. They actually didn't bring down Steinhoff, but anyway.
Their timing was impeccable, though.
Yeah, it was fantastic. Yes. Uncanny, some might say. So when you actually drill down into what they were saying, it was based on anecdotal evidence, client-specific kind of experiences, and really most of most market participants, including and also the Reserve Bank, found no basis to it. And this specific report was just kind of a rehash of that based on the financial results for...
But we did see a re-rating of the Capitec share price, which it topped out at about 1,200 rand, or if memory serves. About 1,200 rand, it's now between 850 and 900. It sort of vacillates between those levels. There has been, I mean, it was massively expensive. There has been that, call it a correction, if you like. Is it worth looking at, Theron? I mean,
I think that's
it listed at 2 rand, went down to 70 cents, I think, in the bank's crisis of 2002, and now sits at nearly 1,000 bucks.
So it's been a tremendous performance. I think that was the problem, that it had done no wrong. People loved it. Its shareholders had all gotten massively wealthy. So it was priced for perfection and more, and was by some measure apparently the most expensive bank of scale anywhere listed in the world anywhere. So I think it's now kind of normalized a little bit because perhaps it was a bit of a cold shower. But having said that, I mean, Viceroy seemed like a bit of a toy telephone operator to me. I mean, one or two guys with a Twitter account, I don't think they even really had any serious money. When the big short sellers in the New York market get hold of you, like they did of African Bank, and the share price gets taken to the cleaners, then you've got problems. But it seems to me that Viceroy will probably get bored soon and go and pick on some Italian banks or something,
Have a proper fight on their hands. More on this conversation after the break. Hospital groups are really interesting in South Africa. They've globalized and now are localizing once again. Mediclinic is still trying its hand at international hospitals, but Netcare is returning home. And Netcare came out with its results fairly recently, in which it said, we will look at international options. And the market went completely bananas. Market does not want Netcare to go global again. It's made that mistake already. Plenty of opportunity for private healthcare in South Africa. Pick up on that in a bit.